I think this is really an important subject, of course, because of where Africa's development trajectory is. We're grappling with the energy transition in Africa. But in addition to that, we also have about 600 million Africans who lack access to electricity. And in many parts of Africa, gas is relied upon as the fuel to sort of generate most of the electricity that is supplied to homes. Besides this energy poverty question, we also have about 1 billion people who still cook their meals in open fires using traditional sources like firewood, like kerosene, charcoal, animal waste. And in particular, we think that if gas projects must be developed, the target must be to address most of these questions domestically on the African continent and not directed at external consumption. We know that many Africans are also interested and have plans actually to industrialize their economies, and it's important that these gas projects in the short to medium term play into the agenda that these African countries have and not directed at external demand from Europe and other places. On the other hand, whilst we are seeing some increase in development of gas projects, particularly for the transition, we are also seeing that investment flows into the renewable energy space globally is reducing, and the African continent is just attracting about 3% of renewable energy investments, whilst the chunk of it is directed outside of the continent. The continuous sort of investments outside the continent of renewable energy and the emphasis on developing gas projects on the continent has the potential to really lock African governments into a long-term dependency situation that would get them indebted, and particularly also considering that renewable energy prices sort of are coming down. This serves as an opportunity to harvest or harness the vast renewable energy potential of African continent, rather than using these investments that could have gone into renewable energy or clean energy into gas projects that have questionable profitability and impact on these economies. Just wanted to make another third point on the narrative around gas in Africa. And for those of you who have been following, Nigeria developed its energy transition framework sometime 2022. Ghana followed and launched this energy transition framework. And all of these frameworks are emphasizing gas as a transition fuel. In fact, in the past few months, you often hear about gas as a destination fuel, meaning that these countries do not see themselves moving away from developing gas projects. And in the context of the transition, I think it's really a very weird situation that we have, where it's difficult to understand what kind of profitability analysis that have been done. And we think that most of these narratives are quite vague. They are quite emotionally charged and lack the needed evidence that suggests that gas can be a transition or even a destination fuel for these African countries, given that, again, renewables seems to have the trajectory of low prices coming up all the time. This agenda sort of also feeds into some of the decisions that are taken in countries like Europe to develop gas projects in Africa. Because if you say gas is your destination fuel, then you would have no way of questioning another country that is coming to develop those projects to satisfy its short-term needs. And we think that Africa should really refocus its ambitions around gas, especially as a transition fuel. Lastly, I wanted to just highlight the point that the decision by African countries to develop their gas, if any at all, should be directed again at domestic requirements, particularly in the short to medium term and not the long term. And I say this because countries like Ghana are looking to develop gas projects up to the mid-2050s, and that's what they have in their energy transition frameworks. We think that that time is really a long lead time. It takes away the opportunity to focus on renewables, and it locks these countries into indebtedness. And countries like Ghana are already on their 17th IMF IMF bailout program, a highly indebted currency crisis in countries like Ghana and Nigeria, which are all linked to some of these externally oriented fossil fuel development projects that we are seeing on the continent. And so on the whole, we think that gas projects with high cost in particular, so those that are mostly deep sea projects with highly long break-even times, are really not the way to go. And we have a report at NRGI that we call the riskier bets, smaller packets, and it analyzes different projects, oil and gas projects across the continent, particularly those driven by the national oil companies and the cost profile of these companies. And we think that it is really out of place for countries that are already indebted to be developing projects that have a high cost profile. And we think that generally we should refocus the thinking around LNG, the external orientation vis-a-vis the domestic requirements for some of these gas projects, and the long-term climate objectives that we need to actually collectively be working to achieve as a continent. There are significant human rights violations. Recall that from the upstream where the gas is actually extracted, whether it is onshore or offshore, these are places that people drive their livelihood, whether it's the fisher folks or the farmers whose lands are taken and given as concessions. In fact, if it is the fisher folks, there's a certain radius within which fisher folks cannot operate in the deep seas where oil installations are. In fact, there are myths across Africa that the lightning from FPSOs and all of the drilling rigs and all of that drives away fish stock, and therefore affects how much they are able to gain from this livelihood that they've depended on over the years. Onshore, there are pipelines in some cases that connect offshore gas, natural gas projects to processing plants and separation plants. The transportation of some of them, I mean, if you take away the LNG bit of it, and you have to also recognize that most of this gas comes as natural gas and then is then separated. There are remainders, there are elements of it that goes to communities through pipelines with methane emissions, and again, there is a certain radius within which you cannot operate as a farmer when a pipeline passes through your community. So all of those are concerns. And again, if you look at where processing plants are located, the issues of health within those communities are significant, and they are all human rights concerns that we need to take care of. And so we have to recognize that besides the three key countries that Vance spoke about in the research, Mozambique, Nigeria, a couple of them, who are looking to export LNG, a number of countries are also looking to import LNG. And in Ghana, there's been the development of a regasification plant in Ghana that is looking to import LNG from Shell. And so we have to realize that the markets are connected. I think we need to repurpose these gas developments for the continent if we have to proceed. And it has to be gas developments that make sense in the short to medium term. We don't have to log ourselves into gas projects that go into the future for external purposes. And so there is demand. There is a West Africa gas pipeline, for instance, that can carry gas from Nigeria into Ghana without having to export it. And so why do we have to develop LNG, for instance? There's enough market on the African continent. And remember, in the ECOWAS region, for instance, there's a power pool that you can generate electricity in Nigeria and share it with the rest of the West African countries. In terms of, I just wanted to touch a bit on the development of current oil and gas projects. I think we have over-optimistic expectations about what oil can do. We have seen what oil cannot do in Nigeria. We have seen what the expectations are in Senegal, for instance, and we just have to manage the expectations and try to diversify our economies into other sustainable investment ventures that will generate long-term value for our people and not get locked down in fossil fuel revenues that have often failed to generate the value that we expect.